Hello. Okay, so our next chapter is the value of supply. So under value of supply, this is a very important chapter. Please pay careful attention to this chapter. So value of supply, this chapter helps you identify that my transaction that has occurred, what will be the value, that is on what value will I be charging GST. Okay, so value of supply, when price is the sole consideration, that is the transaction that I have entered into, there is no other consideration that I'm receiving. If I'm selling goods and services, if I'm supplying goods and services, I am only receiving money. I am not receiving anything else. It is not a barter, nothing. I am only purely receiving cash, and none of them are related parties. Okay, so this transaction will obviously happen at arm's length price. So when price is the sole consideration, what will be my value of supply? So all taxes other than GST will form part of taxable value. So any other tax that is other than GST, it will all become your part of value of supply. Okay, any subsidy received from central government or state government will be subtracted from the value of supply if included, otherwise you will have to ignore. So therefore, if you have already included, then this amount will have to be subtracted. Okay, any interest, late fee, penalty, it will be considered as supply. It will be included in my value of supply only when it is received. That is, this is only on receiving basis, not on accrual basis. Only and only when you receive this amount will it be considered as supply. Any discount allowed as deduction, if you have allowed any deduction to your customer, it will be allowed as deduction only and only if possibility existed at the time of supply. That is, while you are making the supply, that time only you had given them an option, but both there will be a discount if so and so, or whatever condition that you had put, only and only if this was already specified. And second is if it was shown in invoice separately. Okay, that is, this deduction you have shown in your invoice separately, only then will the discount deduction will be allowed. Okay, so this was when price is your sole consideration. Okay, now what? So there are three other rules. So when price is not the sole consideration, that is your rule 27, 28, and 29. So your rule 27 is when price is not the sole consideration. In such a case, for example, we are doing a barter. In such a case, how will you identify the value of supply? So it will be the open. So these are your priorities. This is the priority order. In what way you will be checking? So it will be the open market value, that is your first priority. If you are not able to find your open market value, then it will be the cash that you have received plus the market value of the kind that you have received. That is, whatever asset or whatever you have received in return, the market value of such asset, that will be your priority number two. Value of like, kind, and quality supply, whatever you have supplied. If you're not able to identify one and two, then you have to identify that both others are dealing at what rate. So that will be your value, that is, you'll be comparing with others. Then next is your rule 30, that is cost into 110%. Whatever is your cost, you multiply it by 110%. This 10% is assumed to be profit, therefore we are multiplying with 110. So cost into 110%, this will be your fourth priority, and any other residual method will be your number 5. Okay, then next is between distinct or related person, that is when both the parties are related. So of course, the open market value of the goods that you have supplied, that will be your first priority. Over here, there is no concept of market value of the kind, because over here it is a related party. We are not exchanging. Therefore, this is cross. Value of like, kind, and quality supply, whatever others are supplying for the same goods, that will be considering cost into 110% and residual method. And next is your principal and agent, that is when the transaction is happening between principal and agent. In such a case, you can either take open market value of the goods that has been supplied, or 90% of the selling price of the agent. That is, for example, the principal has given goods to the agent. Now this agent will further supply it to the customer, will further sell it. So the price that the agent is selling to the customer, 90% of that will be considered as value of supply between your principal and agent. Got it? So there, this is your principal, this is your agent, and this is your customer. So suppose the agent has sold to the customer for 100 rupees. So the value of supply for this transaction will be considered as 90% of this 100 rupees. Therefore, this is 90 rupees. Okay, so I hope this is clear. So this is an option given. So either you take option 1, that is your market value, or you take your option 2, that is 90% of selling price to customer. Great. Okay, then of course in this also there is no 2, there is no your value of like, kind, supply, we cannot compare it. Your next is your cost into 110%. That is, whatever is the cost to principal multiplied by 110%, that will be considered as your value of supply. This is your number 3. And last is any residual method. Okay, if the goods are supplied as such by the recipient, so this is your rule 28. Okay, so rule 20, that is we are talking between distinct or related person. So if the goods are supplied as such by the recipient, that is whoever person is receiving the goods, if he receives the goods and as it is he sells it to the customer, then in such a case, if there is an option to take value of supply as 90% of selling price of recipient. Same concept that we studied in principal agent. Over here also rule 28 also has that option. Okay, so this is an option, remember. Next, if recipient is allowed to take full ITC, that is, if the recipient who is receiving the goods, if he is allowed to take full ITC, value of supply shall be invoice value. That is, whatever value has been specified in the invoice, that will only be considered as value of invoice. This table is not needed then. Got it? That is only and only if the recipient is eligible to take full ITC. Got it? Okay. So now moving on to our special cases. That is your lottery, life insurance, and foreign exchange, miscellaneous. So under lottery, your lottery will be face value of ticket or the official gazette price, whichever is higher. Okay, so face value of ticket, that is the lottery amount, the what is written on the lottery ticket, or the official gazette price, whichever is higher, you divide it by 128 and multiply it by 100. Why they are doing this? For example, you bought a lottery ticket for 128. So they are trying to tell you that, boss, this amount that you have paid, this includes your GST portion. Therefore, out of this 128, actually 100 is your value of supply and 28 is your amount that you have paid towards GST. So your value of supply is only 100. Therefore, they are asking you to divide it by 128 and multiply it by 100, so that they can remove the GST component and only take the value part of the supply. Now, next is your foreign exchange. So under foreign exchange, there are two options. That is your option one, that is your rule 32 2AS. You will have to remember these section numbers. And other option is your option 2, that is rule 32 2B, because in the question they will straight away give you the section that solve as per 32 2A or 32 2B. So therefore, this section numbers you have to remember. So over here, if the RBI reference rate is given, and INR is involved, that is of either of the currency that have been exchanged, if one of them is INR, that is INR is involved, it will be the buy or selling rate minus your RBI rate. That will be considered as your value of supply. Okay, and if your INR is not involved, that is, for example, the conversion is taking from euro to pound, so there is no involvement of rupee. If the rupee is not involved and RBI reference rate is given, then it will be 1% of lower of foreign currency converted to rupees using RBI rate. So for example, your euro is 80, your euro is 100 and your dollar is 80. Okay, so 1% of lower of foreign currency converted, you will convert both the foreign currencies to rupees, and then 1% you will multiply. Whichever is lower, that will be considered as your value of supply. And when RBI reference rate is not given or it is not applicable and INR is involved, in such a case, it will be 1% of the rupee that has been provided. Okay, this is your clear cut provision. Now, next is your option 2, that is rule 32 2B, 32 2B, 32 2B. In such a case, if the currency exchange is up to 1 lakh, then the value of supply will be 1% of currency converted or rupees 250, whichever is higher. Remember, this is a higher over here, that is up to 1 lakh, it is 1% of currency converted or rupees 250, whichever is higher. From 1 lakh to 10 lakh, that is basically your 9 lakh. It is 1000 plus 0.5% only on the amount that is greater than 1 lakh. Okay, so that is 1000 plus 0.5% of amount greater than 1 lakh. Okay, so now how this 1000 has come, if you want to calculate, it is basically 1% of 1 lakh, because 1% has already been paid over here. So it will be 1% of 1 lakh is 1000. Therefore, this 1000 has come here, and 0.5% of the remaining amount above 1 lakh, only on that portion 0.5%. Okay, and if your currency exchange is above rupees 10 lakh, then in such a case it will be 5500 plus 0.1%, or 60,000. Over here you have to remember whichever is lower. So in the first part it was whichever is higher, in the last part it is whichever is lower. So above 10 lakh it is 5,500. Now imagine how 5,500 would have come. That is up to 1 lakh it is 1%, that is 1,000. From 1 lakh to 10 lakh, that is 9 lakh. At 9 lakh you are paying how much? 0.5%. That is basically your 4,500. So that's why 1,000 plus 4,500, you arrive at your figure of 5,500. So 5,500 plus 0.1% of the amount that is above 10 lakh. Only on the portion that is above 10 lakh will you be paying will you consider as value supply of 0.1%. Okay, so 0.1%, and you compare it with 60,000, whichever is lower. That means maximum it will be 60,000. Okay, whichever is lower. If opted, you cannot withdraw it in the same financial year. That is either of the options that you have taken, you have to stick through it. You have to stick with it throughout the financial year. Okay, so please solve questions for at least this part of the provision. There is no way you will understand this provision without solving questions. Now next is your life insurance. So in case of life insurance, there are different types of policies, and based on that will be determined what will be a taxable value or what will be your value of supply. So under dual benefit, risk coverage and investment, that is where even risk is covered and your investment is also taken care of. So it will be gross premium minus the amount allocated for investment. That is, whatever proportion of your premium has been allocated for investment will be removed, because that is not a supply. So therefore, your gross premium minus amount allocated for investment will be your value of supply. Then next is your single premium annuity policy. Under single premium annuity policy, premium is paid at once. So that will be 10% of the single premium that will be considered as your value of supply. In other cases, it will be 25% of premium for the first year and 12.5% premium for the next year onward. Okay, so 25% for first year and then onwards it is 12.5%. If there is a policy with only risk, okay, so first we had studied risk and investment, now we are doing only risk. If it is only risk, then 100% of the premium will be considered as your taxable value. Okay, life micro insurance with maximum cover of 2 lakhs is exempt. So this is, since it is related to insurance, so I put this over here, that is any micro insurance with maximum cover up to 2 lakhs, it will be exempt. Okay, Okay. Now next is your miscellaneous, and we will be done with this chapter. So under miscellaneous, betting, gambling, horse racing. Remember, these are your actionable claims, but these have been excluded from your Schedule 3 list. Therefore GST will be leviable on these. Betting, gambling, horse racing, 100% of the bet value will be considered as your value of supply. Next is your air travel ticket by travel agent. If the travel agent booked an air travel ticket which is domestic, for domestic it will be 5% of basic fare, and for international it will be 10% of basic fare. Okay, so for domestic 5%, for international it will be 10%. Purchase, and you have to remember it is only basic fare, no fuel surcharge, nothing else. It is only basic fare. Okay. Now purchase of second hand goods by dealer. If a dealer of car, for example, has purchased any second hand car, so in such a case, your value of supply is your sale price minus purchase price. So for example, if you sold the car for 1 lakh and you purchased the car for 80,000, the second hand car, then your value of supply will only be considered as 20 lakhs. But there is a condition that you should not have claimed ITC while purchasing. That is the 80,000 that you have paid. You will not claim ITC on that. Only then, if you sell it for 1 lakh, will the net 20,000 be considered as value of supply? Okay, now sir, what if I sold it at a loss? What if I purchased it for 1 lakh and I sold it for 80,000? So over here, will I get 20,000 as negative value of supply? GST department says no. If you get a negative figure, you have to ignore if this is negative. Okay, only and only if it is positive will be considered it as a value of supply. Next, if your goods repossessed from defaulting borrower. If any defaulting borrower, for example, I took a car on loan and I was unable to pay this loan, so the bank comes and takes this car. So in such a case, if I am a defaulting borrower, and if the defaulting borrower, that is DB, if defaulting borrower is registered, your value of supply will be your original supply value. However, if DB is not registered, if the defaulting borrower is not registered, it will be the original purchase price of defaulting borrower minus 5% per quarter or part thereof, that amount will be subtracted. And your last is with regards to pure agent. So your pure agent is a person who incurs additional expense to supply main service or goods. Okay, so he will incur any expenses out of his own pocket so that he is able to supply the main service or goods. So in such a case, he will be reimbursed on actual. That is, whatever expense that he does, he will be reimbursed on actual. That is against his receipt. There is no profit margin. It is only actual. So in such a case, this reimbursement that he gets, that will not be considered as a supply because it is a form of reimbursement. It is not a supply. He is just being reimbursed for the expenses that he has incurred. Okay, and with this we are done with our chapter value of supply, and our next chapter is input tax credit.